Welcome back. Now, they say you must touch the past before you can see the future. Whether that statement is true or not, the importance of knowing where we came from can never be underrated. Question: the last time you went to the bank to make a transaction, did you pause long enough to wonder how that bank came to be? Well, worry not, you don't have to do that, because this morning we want to take you through the history of banking in Kenya in one sitting. And to help us do that is, of course, CEO Kenya Bankers Association, Habil Olaka. Welcome to the Power Breakfast Show.
Thank you.
Of course, before we focus on the banking history, we could look at you as a person. Of course, you took the leadership as CEO back in 2010. It's been about 3 years. Is this something that you always wanted to do?
Yeah, maybe something just about my background.
Yeah.
I was talking to Mutegi just a few minutes ago, and I was telling him that I'm an engineer by profession and by training. But then I'm also an accountant and a banker. And I've spent a number of years in banking. So I came from development banking into the KBA to spearhead the reorganization of the Kenya Bankers Association. So that's basically my background.
All right.
What does the Kenya Bankers Association, what's the mandate of the Kenya Bankers Association? Is it a trade union? Is it a professional body? What is it?
We actually have 3 key mandates, if I can call it that way. Our first mandate is to spearhead the advocacy role. The advocacy that is interacting with the policy makers, trying to ensure that the policy landscape for our members is conducive for their business. So we interact with the regulators, with the parliamentarians, with the Minister of Finance, currently the National Treasury, and the other stakeholders in the policy landscape. Then the second role, which is more traditional, is the fact that we look after the industrial relations in the industry. And so we negotiate the collective bargaining agreement on behalf of the members with the union, and that we do every 2 years. And then thirdly is that we own and run the clearinghouse. Clearinghouse is initially it was actually a physical house where banks would meet every morning to exchange the payment effects. But now with the modernization, we have now moved away from physical exchange of checks into electronic transfer of images across the payment system. But basically we still have a clearinghouse.
I thought the clearinghouse is a property of Central Bank.
No, that's the misconception. It's actually the property of the Kenya Bankers Association.
But you're housed at Central Bank?
It's housed at a property that is owned by the Central Bank.
All right. Just before we move on to now the history and the tidbits there, in one question, of course, campaigns have been there. Don't put your money in some blanket or some mattress in your house. Take your money to the bank. But the question is really, how safe is my money in the bank?
Yeah, and that question, I think, can well be understood from the perspective that currently there is a very clear regulatory regime in the country, especially in the banking sector. And it's possibly, I would say banking is possibly one of the most heavily regulated sectors in the country, and for a good reason. For example, we have got what we call the Deposit Protection Fund. The Deposit Protection Fund plays an insurance role. So as long as you have got a deposit in a bank that is, so to speak, insured by the Deposit Protection Fund, your deposit is safe up to a given amount. So you can lie, comfortable knowing that your amount, whatever, if there was anything to happen to the bank, your amount is still secure.
But
that is protected by the Deposit
Protection Fund. That is for
Fund.
banks that collapse. The Deposit Protection Fund was set up when banks, African-owned banks, the guys would set up a bank. There will be managers, the owners, the directors, and then they collapse the bank with customer money. The Deposit Protection Fund was supposed to take care of that. What about a customer? In fact, there was a story in the newspaper the other day where bank employees are stealing lots of money through electronic systems and using checks. In fact, the story was I think on Monday. What about that kind of theft? Not that the bank collapsed, because that I don't think is protected by the Deposit Protection Fund.
Now you see, what sometimes tends to happen is that we get stories coming out, and the truth does not come out. The story, for example, could be that there was an attempt on a bank. There was an attempt to steal money. That money was not stolen. It was actually recovered, or the attempt was not successful. But the way it will come out is like the money was actually stolen. So the tendency for us to view as if there is a huge problem, when possibly there isn't such a huge problem, is there.
You're diminishing, you're making it as it's not important. The report gives them amount stolen from banks.
Yes.
And that money is not bank money, it's customer money.
Yeah.
Yeah.
Now, and that's exactly what I'm talking about. Those reports tend to exaggerate the story. Because some of those stories, the reports, I see them. And I see the truth behind them. You see, what will happen is this. I'll give you an example. There would be an attempt to, say, supposing right now I
Why are you
brought a
calling it
check.
attempt that the money is gone?
Supposing I brought a check for 100 million shillings, and I'm paying Mutegi, and you take that check and try to have it through the process. The first thing, 100 million shillings will not go through, because you have got what you call value capping in the clearinghouse. Now, that amount will be tracked as if there was an attempt to steal 100 million, and 100 million was recovered. So the story will be 100 million was stolen, and 100 million was recovered. What I will tend to see from the public perception is that banks have lost 100 million. But in reality, it was an attempt which was not successful. In fact, the story that's not coming out is the fact that there are control measures that have been put in place through the banking system. They may not be as perfect to completely wipe out the attempts, but a number of them are actually being trapped, and that's why we can see it appearing in the public.
So is it true or right to say that regardless of the reports that we receive that, money has been stolen from a particular bank, my money in that bank is safe?
Yes, that is the message that I think we should put forward, that my money in the banking system is safe. There are enough control systems that have been put in place to ensure that my money is safe.
I can assure you that I don't agree at all, because I have no instances where customer money has been stolen from banks. And first of all, the bank will sack the employee. Probably not even take, because they want to cover up. They don't want to show as if, banks do not want to show, even companies do not want to show that their staff steal. Because there's lack of confidence. So they will silently sack the employee and try to cover up the customer money was stolen.
But maybe let's look at it from the history, because here we are really here.
Yeah, for the history.
We need to talk about the history. Maybe the progression. We have had challenges within the banking industry, but a lot has been done. From the way back, if we traced the history of banking, and this documentary really traces it back up to from as early as 1900, when there was the initial European trade at the at the East African coast. And the first bank, which is the National Bank of India, set up its operation in Zanzibar. That then moved to set up their first operation in Mombasa. And the growth of the banking industry into the interior of Kenya is so closely linked to the railway line. Coming of the railway line all the way down, and the commercial activity that was following the railway line, banks somehow follow that to facilitate that commercial activity, all the way until it set up base in Nairobi. And through that, we see quite a bit of evolution coming up. And this documentary has tried to track that process and the contribution that the banks have made in the economic growth.
What we're saying, you have done a documentary of the history.
Yeah, there's a documentary by Hilary Ngweno.
Yes.
It's actually on YouTube. In fact, you can go and get excerpts of the documentary on YouTube, The History of Banking in Kenya. So we're basically just touching on it so that you understand it, but you could always watch it. Yes.
Yeah. So the documentary is wide. We would not be able to cover the whole documentary in just a few minutes of our discussion. But it basically covers the pre-independence period and the early banks. And then it covers the post-independence period and the emerging Africanization of banking. And then we also see the indigenous banks coming in. There was also the government-controlled banks that were a player in the early post-independence period. And then in the development of the banking industry, there's quite a bit of a story to be told there, because you have had our challenges, you have had the role of, for example, of the regulation, and the challenges that came with the role of the regulation. Especially there were the bank crisis that were there in the 1980s and the 1990s for various reasons. We have got things like, for example, we cover the gender diversity in the banking industry. Initially, it was quite a challenge, really, to get, for example, the women absorbed into the banking industry, both from the employment perspective and from customers of the banking industry. And the documentary captures a very well-articulated narrative from one of the pioneers of in banking, that is Dr. Mary Okello.
In fact, those are some of the photos, even as we talk about the history of banking. Perhaps before we get to the gender issues that were there, of course, with the start of the National Bank of India, other foreign banks also came to the center stage. And in as much as banks were expanding, access to Africans was really limited. Perhaps you could talk to us about that, how Africans finally got a chance to be involved in the banking system.
It's interesting because initially Africans did not have access to the banking industry, so to speak. Initially, pre-independence and post-independence, the only access they had to banking was through the post office savings bank, which was really using the post office outlets around the country.
That was the only bank that was there.
Yeah, but even access to the Africans then was really limited, because you had to be there at the time when those specific outlets were open, and they were then being manned by the colonial staff at that point in time. So you have seen banking, access for banking to Africans evolve from there, where initially it was in the hundreds, and it has grown with time until indigenous banks were set, and those banks then started having better access for the Africans to be able to access the banking services through their system. And if you move it forward from what it was then to what we have today, there's quite a bit of a story to be told there. Because right now, if you look at the access to banking, the statistics are still out there, but currently we could be talking of something in excess of 50% of the bankable population now being able to access the banking services.
The banking services.
That's not good enough. A lot of Kenyans, except now with M-Pesa and M-Shwari, whatever, mobile, these electronic banks.
Yeah.
Many Kenyans could not, for instance, go because of deposit requirements. Banks used to say, for you to have a bank account, a savings account, not even a current was even more difficult. For you to have a savings account, you have to have a deposit. At one time, big banks said 10,000. So a lot of people, city council here, people in city council could not have, or teachers could not open bank account because of the demand. Even now, those deposits that banks ask, you must have a minimum amount of money in that bank. And then, of course, the larger fees. But with the M-Pesa, I'm sure he has no deposit. Just
But you see, the M-Pesa story, and there are actually two developments that I think we would want to bring to fore in terms of bank access. One development is what I can call the convergence of mobile telephony and banking services, where we see the innovation bringing in the mobile banking, so that effectively you can be able to access